Hello, everyone. Thank you all for tuning in. My name is Courtney, and I am the marketing specialist here at Fed Choice. And today we have with us a new face. Ashley is joining us. Ashley, why don't you tell us a little bit more about you and what you do at Fed Choice?
Okay. Well, again, my name is Ashley, and I work at FedChoice as the Consumer Home Equity Lender 2, which means I work on credit applications, but really more specific to home equities, where I review, I interview members, have consultations, go over documentation, review for decision, and I prepare you for settlement.
Oh, nice. So you do a lot with our lending department, specifically with home equity. So you help make sure that our members are ready to get their home equities when they need them, right?
Correct. And if you have opportunities where you need consumer loans, I will get you into one just the same.
Cool. Well, today I brought Ashley on because I wanted to talk a little bit about how credit can affect you. We all know the basics of, it'll get you approved for a loan or maybe denied for a loan, but credit goes deeper than that, right, Ashley?
It sure does. It sure does.
So, what are some other ways that credit can affect you?
Well, number one, if you want to get a job, 9 times out of 10, they're looking at your credit.
Mm.
You want to rent an apartment, they're looking at your credit. You want to buy a home, they're definitely looking at your credit. If you want to purchase a cell phone, a lot of times coming right out of high school, sometimes your parents put you directly onto a cell phone plan of your own. You got to have some kind of credit, decent credit. There's a lot of ways. I mean, when you go to buy a car, they want to see credit. So a lot of times, in a lot of things that you do, even down to utilities, your credit matters.
Oh, wow. So, basically, all your life necessities, your credit has an impact on that.
Yes, your credit will determine which way you go in life.
Oh, wow. So explain to me a little bit more about, you say utilities. I didn't know they checked your credit.
In a lot of states, they do. You would have to check with where you live to see if that's what they do. But a lot of times, your credit does matter. Just as with like a cell phone, the same thing. Like your credit needs to be in a decent shape. Otherwise, they do. At times, they will make you do like a direct deposit, not direct deposit, but a deposit down, so that you know that you can be somewhat secured in doing business with them.
Okay. Okay. So another question I had was, let's say a person has excellent credit. They've got an A plus credit score and they apply for a loan, an auto loan, for example. And then we have a person with a lower credit score that applies for the same auto loan for around the same amount, but they get it too. They're able to get the auto loan too. What's the big difference? Why does credit matter that much then?
Well, in this case, the person with the lower credit score is going to have a higher monthly payment because of that higher interest rate. It is not always wise to, just because a dealership, for example, will say, "Oh, you're approved," because no one else would approve you. A lot of times they're giving you a higher interest rate in which you're paying, sometimes there could be negative equity depending on the trade. But a lot of times you're paying just way too much. Um, and so the person with the higher credit score is going to get the lower interest rate, the lower monthly payment. And in a lot of cases, a person with the lower credit score, the higher interest rate, may want to pay more towards their payment every month to eliminate the amount of interest that they're paying over the life of the loan.
Mm. Okay, so like for example, the person with the higher credit score, they might have to pay $300 a month, while the person with the lower credit score is paying $450 a month, right?
Might be more than that, but yes.
Oh wow! Oh wow! So that's a big difference.
It is. It is.
Yeah, and that adds up over time because if you think about every car that you ever buy, and does that affect mortgages the same way?
Say that again.
Does that affect mortgages the same way?
Absolutely. But see, when it comes to mortgages, they're looking at three different credit agencies and looking at your score, and they're going to determine what your median score is. So at the end of the day, you might think, "Oh, I have a 800 credit score." right? Or for the average person, I might have a 720 credit score, but they're looking at that middle score, which means you're probably getting, your interest rate based off of that 650 credit score or that 700 credit score.
Mm. Wow. Wow. So over the life of an auto loan and over the life of a mortgage, you could save a lot of money by having a better credit score.
And right now, rates are low. They are going to start going back up. So this is the right time to get your mortgage refinanced or get into your first home, even purchase a vehicle while rates are low.
That's good advice. So tell me, I have another question for you, Ashley. Is credit the only factor that matters? Is credit the only thing that lenders look at, or is there something else that they look at as well?
We look at everything. A lot of times members have this misconception that I've been a member since 1970, 1980. And that is a wonderful thing. It really is. And it actually does make a difference in a decisioning factor. However, there are other things that we look at. So in terms of how long you've been a member, that's like your character. What kind of business have you established with the credit union? Do you have a checking account, savings account? Are you actively a member? Are you using it? Do you have a direct deposit and other accounts established? That determines your character with us over time. So just because you've been a member, if you're not doing any activity with us, it really doesn't mean much. Okay, so we want to definitely see that you are an active member of this institution. Another thing is collateral. We're looking to see what kind of credit you've already established. Have you made on-time payments? Especially with credit cards, how well are you with revolving debt? Can you keep up with that kind of thing? And then you have how much debt can you hold and carry at one time? Because sometimes people go in and get a loan this year and then think they can come back again next year and get another loan. But it really depends on how much your income can support you and how well you can manage those debts over time.
Oh, okay.
So your credit history is very important.
Okay. So your income, and does your job history come into a factor as well?
Yeah, that's another one. Like I said, it's the entire picture. So we're looking how long you worked at your job. Even if, like, let's say you're a person that moves from different agency to different agency, but you've maintained that same position, that's still sufficient in terms of like how well, are you a stable individual to lend to? So yes, that is another one of the characters that we look at.
Okay, thanks, Ashley. So some members may come to us, you in particular, as a lender, and wonder, my credit is bad. They know that their credit is bad, and they want to know, what do we offer at Fed Choice that can help them?
Okay, well, number one, never be deterred from applying and getting a standard loan, because we won't know what your credit looks like until we have the full picture. Unless you've already pulled your own credit and have an idea. At that point, I would definitely sit down with a financial advisor to determine what's the best option or best direction for you to go. But we do offer loans for our individuals who might be wanting to repair their credit, such as we have so many products. Give me 1 second.
No problem.
It's called the Now and Later. We make special names for our products, so that's why I had to think make sure I said it the right way. It's the Now and Later. This means even if you have established some derogatory debts, meaning collections, charge-offs, delinquent loans, we can still help and get you out of that. One of the things that the Now and Later allows you to do is take about $3,000 at max of that debt, and we will offer you to pay that debt off, but we're giving you half of the money up front. Okay. So $1,500 of that we'll give you up front to clear off any derogatory debt. So you can't be too far in the hole. but we'll give you something to pay towards your derogatory debts. And then once you've paid that whole $3,000 off, then we'll give you the additional $1,500 because now you've shown your ability to repay that entire amount. Okay, so it's similar to like a secured loan. And that's the second type of product that we would suggest for someone who does want to get out of debt. If you have a vehicle that's been paid off, it probably still has some form of collateral and equity available to borrow against. That's another good way to take some money out and pay off your debts. Third is to apply for a standard loan, have a co-borrower, a qualified co-borrower assist you with being able to establish this loan. Now that qualified co-borrower needs to be able to show that they are capable of managing the loan on their own in the event that you do happen to default or have other circumstances that keep you from applying. And then the big one is, let's say we are not in a position to lend to you at this time based on your circumstances and your full financial picture evaluated. We have a product or a service called GreenPath. GreenPath is it's sort of like a financial counseling program that works for our members. So if you're a FedChoice member, it's free for you to consult with a GreenPath associate. Yes. They will, let's say you're getting ready to, and not just your derogatory debt, right? They can help you in more ways than one. They're super awesome. Let's say you're getting ready to get married. Let's say you might have an unfortunate circumstance where you have to plan for a funeral. You want to go on vacation. GreenPath can assist you with how to manage your debt. You can just tell them your life story and they'll put you into, they'll get you on the right track to getting your financial wellness in a better position. Or they can actually help you with, like I said, the counseling piece of it. They can assist you with paying off your debts for you. So you consult with them, they'll let you know what they can do, and your credit should be nice and good over the next few years or so, depending on how big of a debt you have that needs to be taken care of.
Right. I'm a big fan of GreenPath because they will also, help people create a budget. So like you said, even if it's not something necessarily with your credit, but you want to understand more about your finances, GreenPath is a great option for our members. So definitely check them out.
I checked them out when I was getting ready to buy my first home several years ago.
Okay, cool.
I did. I called them and I wanted to know, what do I need to do? What should I prepare for? And they were super helpful. So I was glad to be able to have that free service to me.
Nice. Cool. So another question that I had, Ashley, was if a member does apply for a loan with FedChoice and we're unable to approve them, what happens next? Do we just send them on their way, or what do we do?
Okay, well, when your loan is decisioned, we will send you an adverse action form. Everyone receives an adverse action who does not take on the loan that they initiated to receive. In that adverse action, it does state the reasons as to why that loan was not approved at this time. Okay, it is very important to pay attention to those factors so that you can tackle those factors, so that the next time you do need to borrow from us, we can definitely assist you. We never ever shoot you down and say, you're declined, you can never come back. We want to help you. So let's say you do have these determining factors on your adverse action. You can contact us back. We can go over those items with you. We can do our best to tell you what needs to be taken care of. And it's up to you as the member to, get yourself back on track. We're here to help you, but you have to make the first step.
Nice. So one thing that I remember hearing you say another time we talked, Ashley, was that as your credit union, FedChoice is here to help you. And sometimes by giving you a loan, we are not necessarily helping you depending upon your circumstances. So the adverse action letter that you're talking about, that tells you the actual steps that will help you so that to know when you're ready for a loan in the future.
Yeah, absolutely. And so, I mean, the thing is, we do our best to determine if you apply for a specific loan.
Mhm.
It might not always be the loan that you need. You might
Mhm.
want, like, for example, you might want to do a home equity to do some home improvement,
Mhm.
right? You know, we all sitting at home looking for things to fix up around the house, and you want to fix your bathroom, your kitchen, and all that. But you find out that you got several credit card balances sitting on your credit, which is, eating up your, is was growing your escalating debt. And then that's a determining factor that, we cannot overlook. So at the end of the day, if doing a home equity loan because it offers you a lower interest rate than your standard personal loan, then
Mhm.
we would say let's do a home equity debt consolidation instead.
Right.
And
Okay.
we can set it up for a period of time so that you can pay it off, within the term that's comfortable for you or that works best
Mhm.
for you. And
Mhm.
then you can, because you've shown character and history that you can repay, you can always come back and we can do the next thing for you.
Okay, nice. So when a member comes to Fact Choice, they don't just get a service. They don't just get like a quick service. They get a full look at from our lending department.
Absolutely.
And we look at their full scenario so we can help them choose what's best for them.
Absolutely. We're never going to just turn you away. We're always going to look for the best opportunity. And a lot of times, what people don't realize is that we're always looking for something in addition to. You might want to do an auto loan.
Hmm.
Let's say you're going on vacation with this new auto. Why
Hmm.
spend your own cash when we can offer you a personal loan too? So you can
Right.
always apply for multiple loans at one time if you want. But we will also do the same thing to see, like, if you get approved for an auto, we want to try to help you out in any way we can. Do you need a credit card? Do you
Hmm.
need a personal loan? And
Hmm.
we'll look to see, like, if you, a lot of times people don't want to look at their mortgage rates, right? So
Hmm.
sometimes we'll look to see if putting you into a lower interest mortgage might be in the next best thing for you. So we're always looking for opportunities to help our members. That's what we're here for.
Nice. Well, thank you, Ashley. This has been a great conversation. I definitely didn't know that the lending department did all this. I knew that you all were very helpful for our members, but you laid out even more of the steps that you all take to help our members. So this has been a great conversation. Before we go, I did just want to say hello to everyone who is watching us live and who's commented. Johnny, LaShawn, Carla, and Crystal, thank you all so much for tuning in. To everyone who will watch this later, thank you so much as well. And Ashley, thank you so much for being here with us today.
Thank you for having me. It's been so fun.
We'll have to have you back another time.
Sure, anytime.
All right, everybody. Happy Thursday. Have an amazing day. Bye bye.